Hello there, my name is Matt, and I have decided to do two videos this weekend, so lucky you, dear viewer. If you have never seen one of my stock speedrunners, blah 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 blah, I can't talk. Maybe it was a bad idea to do two. My mouth seems to not be working. Let's try this again. If you have never seen one of my stock speedrun videos before, I strongly encourage you to check this video's description for an explanation and a disclaimer as to its content. Okay, that went well. Let's see if I can actually talk for the rest of this friggin' thing. Okay, ooh, we're gonna have fun with this thing. So, Bed, Bath, and Beyond definitely makes sense that I would hit on this one, considering that it has been a big mover, big talked about company this past week. So, if you have watched these videos before, at least some of them, you know that whenever I come across a company that I have personal involvement with, I am more than happy to share that information. Bed Bath & Beyond is a company that I have personal involvement with. I do own shares of this. I unfortunately own shares at a price point of about $10. So the ape run this week wasn't quite enough for me to get back to even, but if anybody from Wall Street Bets is out there is listening, I would encourage you and your friends to try again, because I would very much like to be able to sell this for even. I'm not in a terrible place because I am at least able to sell options against my position in order to get my money back, but it will take a long time. Luckily, I am a young man and I have that kind of time to waste, but it would be nice to not waste that time. So, hey, if you guys want to make another run at this, I would encourage you to try again, but that's neither here nor there. So, that's my personal involvement with this company. I am probably not, well, okay. So I am debating with myself right now how to approach this. Do I want to approach this analyzing the company as is, or do I want to approach this from a perspective of how likely is future squeezes to happen? And tell you what, I kind of want to talk about both. So I'll try to make a decent balance of discussion. First thing I want to do is I want to actually look at the finances of the company. So revenue declines, big revenue declines year over year. Struggled to make a profit for those years, unfortunately. I personally like Bed Bath & Beyond. I never really understood why they do terrible business. Right? Because I like to invest. I personally like to invest in things that I like. So when I saw other people liking it, that's when I bought in. I know you can call me a sucker. Luckily, I have, the time and money to waste to do shit like that. But, again, it would be nice to not have to waste that time. Anyway. So, yes, this looks as bad as I had expected, unfortunately. Wow, you're seeing declines in the quarterly even. That's very unfortunate. Okay, these articles are probably all talking about living, breathing example of a need for financial literacy. I would argue that you need a lesson in financial literacy, friend, because what is the rule of the free market, all right? Things are worth whatever people are willing to pay for them. There is arguably no such thing as overvalued, all right? The value of something is whatever someone's willing to pay for it. That's literally all it is. So this is your lesson in the free market for today. So if you try to make an argument that it shouldn't be trading at this because that is not the proper valuation of the company, I am going to disregard all of your opinions. because that's just not how it works. And I don't really care enough to read all this shit. An active, little bit degenerate trade. Yes, I agree. In bankruptcy talks with lenders. I read that news earlier this week also. In talks with, and honestly, you know what? I probably should have seen the wildness of this past week coming, because you were increasing a lot, or you were introducing a lot of volatility in this company in just 1 week. You had the earnings report this week. You had the declaration of bankruptcies. You had the closing of stores, and all of that stuff is going to draw attention to this company. And what does a company need in order to become a short squeeze darling of the apes? It needs attention. That's what happened the first time this went up, and then, you know, it kind of died down because, again, news died down. There wasn't a lot of attention being drawn to this company. And then what happened this past week? A lot of attention being drawn to this company. And I would argue that attention is what triggered the attention of, you know, the squeezers, as opposed to the squeezers being what drew attention. It is not a chicken and an egg scenario. It is definitely the volatility of all of the events that were going to happen with this company this past week that drew that attention and caused that squeeze. And you know what? I probably should have seen that coming. What could I have done about it? I could have bought calls. I 100% could have bought calls. I probably wouldn't have bought shares, because I'm not too sure if I wanted to bet that much money again. But I 100% could have bought calls, and I probably should have seen it coming. But I can get lazy sometimes. I do have a day job, unfortunately, and that gets in the way of trading something. So anyway, that's my diatribe out of the way. So, selling assets to private equity firm. Retailer says no comment. What kind of assets? Very interesting they would have no comment on that. Let's see. Ponders bankruptcy. There's something to think about. Value of stock is better than grow. Blah, 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 blah. I kind of wonder about this bankruptcy business. I wonder if this is overblown. Actually, what does their debt look like? Is it really as bad as people are making it out to be? So, total debt, $3.64 billion. Total cash, $1.53 million. Okay, yeah, it's it's as bad as it looks. Holy shit. What's even the valuation of the company right now? Okay, well, when your debt is many multitudes higher than the entire valuation of your company, as well as the total cash that you have on hand, it's got to be at least 5 times that amount. At least, I think. Doing some quick math in my head. That's not a good look. That's not a good place that you want to be in. And that includes the inflated price from the squeeze this past week. If we talk about the price where it was prior to that, you know, middling around here in the, you know, the high ones, situation gets even worse. You're talking about potentially 10 times more debt than you have anything, really. Which is, it's such a strange bunch of numbers. It's not just those numbers that are strange. It's the fact that those numbers exist for a company that easily brings in billions of dollars each year. It seems to be, okay, yes, sure. You have the year-over-year declines, right? That's evident, but you're still talking about revenue in the several billions each year, which is not something that just any company can tout. So it seems to, so the problems they seem to have appear to be, it's not a revenue problem, it's not a problem of bringing in, you know, business or customers. You know, I like Bed Bath & Beyond. I've always liked that company. I've always liked going into that store and looking at all the products they have in there. I know a lot of other people do too. It seems to be an expenditure problem. Now, is that because they're mostly a brick-and-mortar retailer? Maybe. Maybe, but you know, if I was to look at other companies that are mainly brick-and-mortar retailers, if I was to look at Best Buy, they're doing just fine. They're doing a lot more revenue, but they managed to make profit. So it could very possibly be, well, so think about, I'm going to stick with this. I'm going to stick with this Best Buy comparison real quick. Think about Best Buy. Think about how many Best Buys there are around you. Right? And then think about how many Bed Bath & Beyonds are around you. It's probably just as common driving down the road to see a Bed Bath & Beyond as it is to see a Best Buy. Right? I think it is, at least where I am. Maybe even less common to see a Best Buy as opposed to a Bed Bath & Beyond. So for the stores to be just as common, and yet for Best Buy to have multitude higher revenue, then Bed Bath & Beyond seems to be doing much worse in same-store sales. Right? That makes sense, right? And that could potentially be what's causing their inability to create earnings. Because when you're mostly a store, a brick-and-mortar store, your costs, I think, again, I'm kind of stretching the edges of my knowledge here, your costs are mostly static. The costs of your buildings don't change. The costs of your employees mostly don't change. Maybe you need more employees in the busier stores. That's debatable. The only thing that really changes is the costs to bring in new inventory. Because if the inventory is moving faster, you got to bring it in faster. That's my, 5-minute analysis, not really having not really being an insider as to how retail works. There was something that I thought of before that I wanted to look up. What was it that I wanted to look up? I forgot what I wanted to look up. I wanted to look up something, and I don't remember now. I don't remember what I wanted to look up. Now that I have the Google tab, I can't remember. Take a look at holders real quick. I'm actually kind of surprised that this many is held by institutions. I figured that everyone would have dropped this by this point, but apparently not. Very interesting. Let's see, what else do I want to see here? I want to see statistics. I wonder how much short this is. That is a lot of short. This is also a good indication of why I should have known that this squeeze of the past week is coming, because it's not just the attention being drawn to the company, it's the attention, and then the short percent is the entire reason why companies are targeted for that. I should have seen it coming. Should have seen it coming. Okay, let's take a look at conversations. Probably a lot of screeching in here, I can only imagine. I don't know what the fuck that guy's talking about. Figure out what inventory they can at current prices. Bondholders will either be new, common shareholders. That would go Chapter 7. How we would do on Monday. Bought at close 4,000 shares. Holy shit, buddy. Good luck. Jesus Christ. Market's getting bullish. That is true. The markets are more bullish than they were for the past few months at least. Easiest short probably in a decade. Yeah, but calling the top is the hard part. Um... So the question that I'm trying to ask myself right now is, again, this Monday's a holiday, so when markets open on Tuesday, what is this going to do? Is it going to start rallying again, or is the drop going to continue? My gut says that the drop is going to continue, because what did I say the formula for, you know, squeezes like this was? It's not just high short interest. It is high volatility, and it is high attention. You have the short interest. You can even argue that you still have the volatility. But do you still have the attention? I honestly don't think you do. I don't think you do. I think the attention from this has waned once again, and it will not return until more volatility occurs, which is very likely in the future. I'm not saying it's not. I'm just saying that it's not likely right now. I don't think. I wouldn't be surprised that if it opens Tuesday, it drops like a rock. And for that reason, at this point in time, at this immediate point in time, I'm going to have to give it a sell. Now, would I go ahead and... yeah, of course there's a slightly positive rating, because people on the internet are idiots. But now, if I was to look at this maybe a couple months in the future, and I saw an event or a couple congruent events of volatility coming up, would I change my tune? Yeah, maybe. If I had looked at this last weekend, and I would have noticed that, oh, there's rumors of bankruptcy. Oh, they got earnings this next week. That's a lot of volatility this week that's being introduced. Would I give it something but a sell? Yeah, I might give it a hold, honestly. I don't know about a buy. I don't know about that, but I could definitely see hold. But at this point in time, I think sell is the right call for this, and that it's going to drop like a rock on Tuesday. And that's coming from somebody that owns shares. That's coming from somebody that owns shares at a $10 price cost basis, and would like nothing more than to see this rocket further so they can finally unload those shares. But I honestly don't think it's going to happen. I don't think that's going to happen. All right. Anyway, I think I've rambled on enough about that. Thank you for watching. I'll catch you in the next one. Have a good weekend. All of those niceties. See ya.